This is the World Financial Report on Radio with Harold Siegel. My name is Randy Marshall. Joining us via the telephone, our financial expert, Harold Siegel. We're taping the show on August the 5th, 2011. Our time, 8:35 in the morning Mountain, 10:35 Eastern. The radio show runs on AM 640 in Toronto, 630 CHED in Edmonton. If you ever miss a radio show, you can listen to us online. The shows are archived at Harold's website, HESradio.com, HESradio.com. Strong week for precious metals. Never a dull moment in the financial markets. We got through the debt ceiling, budget issue. Then investors became focused, concerned about bad economic numbers and a double-dip recession in the United States. The icing on the cake came yesterday with worries over the European sovereign debt crisis and global recession fears. The TSX in Canada down 435. The Dow was down 512. Gold and silver, Harold, did very, very well. And those in hard assets have been protecting themselves and been profiting at the same time.
You better believe it, Randy. Again, volatility is definitely the name of the game here, and again, the markets are certainly very, very volatile. In actual fact, today on Friday, as we're taping the show, the Dow opened up after a huge drop yesterday of over 500 points on Thursday. Dow opened up 171 points on some bogus job numbers that were pathetic, to be honest with you. But I guess any increase whatsoever, they're going to take it as bullish for the marketplace. But then the market decided to go lower, and that's where it is right now. Gold and silver are very volatile. You see, what happens during these particular times when this volatility hits the market, and especially when the stock market falls as much as it did. By the way, on Thursday it dropped over 500 points. We don't know what it's going to end up doing on Friday, but in the last month, the market's dropped about 1,500 points. And basically that's what the market should be doing. I find it impossible to believe that the market was rallying up to 12,500, almost 13,000 points on a country that's on the verge of bankruptcy. To me, it makes absolutely no sense what's going on at this point. But again, I know one thing. I do not want to have my money in paper assets, and I only want to have my money in hard assets. So at this particular point, I think that we should really start to see in clear view what's really going on. The bottom line is that gold is a hedge against inflation and against major world problems financially, and that's exactly why gold is sitting at $1,660 as we speak, another record high. Silver's trading at $39 to $40 at this point. We did hit a higher price of about 41 and change during the week, but there's absolutely no doubt that this market's going substantially higher. The other thing is, and I've seen this happen many, many times, and as listeners to the radio show, you've seen this happen many times over the last 10 years, as the markets get more volatile and as the stock market sells off, and this is a phenomenon that happens at the beginning of a sell-off of a stock market plunge like we saw, again, over the last month. What happens is that the fund managers, in many cases, are very heavily leveraged, so they've leveraged their stock positions heavily. And basically, when the markets fall, those leveraged positions really hurt them substantially, and they have margin calls the same as you would if you were trading leveraged positions in commodities. And they've only got a very short period of time in which to make these margin calls. So when the Dow dropped 500 points yesterday and the TSX dropped almost the same, what happens is these fund managers have to raise as much money as they can in a very short period of time to make up for these massive margin calls. And that's why you see the volatility in the gold and silver market and in oil like you saw yesterday. However, nothing in the world has changed. In actual fact, we believe that by the end of the year we will see gold at $1,850 or higher, and we'll see silver back up to at least 50 and possibly 55 or higher. So again, we're very bullish. If we get any pullbacks in the market whatsoever, it's a strong buying opportunity. The other thing is that Congress is going on vacation. Listen to this, for 6 weeks. 6 weeks. Could you possibly, if your business was failing like the U.S. government is failing and the economy is failing, could you ever take off and take a 6-week vacation? I think it's the most ridiculous thing. I'm on vacation right now, and I still work every day. You know, there's an old expression that I've always lived by, which is you can make money, you can make excuses, but you can't make both. And the fact is that when your business is failing, like the U.S. government is failing, and they're in these horrific financial situations, you don't take off for 6 weeks. It sends a very negative message to the people out there that are depending on you to do a good job, and there you are off on a vacation for 6 weeks. To me, it's the most ridiculous thing I've ever seen. President Obama is off bebopping around because it's his birthday. I wouldn't even admit it's my birthday if my businesses were failing. So the bottom line is that it just shows you the attitude of the people that are running the country and why this country is in so much financial trouble and why it will continue to do so. The last place in the world I would have my money right now is sitting in the stock market. And again, this is the third time in the last decade that we've seen the same situation happen. Back in 1999, when the dot-com companies plummeted and the NASDAQ dropped from 5,000 all the way down to 1,000. The fact is that we saw it in 2008 when the Dow Jones dropped from 14,000 all the way down to 6,500. So again, why in the world would we even consider investing our hard-earned money in a market that has that type of reputation and can plummet like that? At this point here, I've been through these markets before. I've been through the inflationary markets of the 79-80 period. I've been through the commodity cycles. I've seen all these markets trade, and I know how they work. And basically, I don't have a penny, and I have not for the last decade in the stock market. The fact is that we're going to head into the worst financial times that we've ever seen. And most of us have never been through anything like this before because we're not old enough to have gone through the Great Depression. But this is the worst financial situation because it's not restricted to just one area. It's really worldwide. You look what's happening with the sovereign debt situation in Europe, and it just keeps getting worse and worse. The fact is that when you owe as much money as these governments do, and you haven't righted the ship in order to bring the money back in, the fact is that you're going bankrupt. And with the United States, this $15 trillion deficit, and now, why would they be euphoric about the fact that that Congress passed and allowed them to borrow or to print more money? It's absolutely only a Band-Aid on open heart surgery, and the fact is that it's going to come out and really bite them. In fact, most of the American public right now are extremely uneasy. They know that this is a horrific situation, and again, when you owe as much money as the U.S. government owes and they can't pay it back, my gut feeling is that they're going to go bankrupt. I don't see any way in the world that the U.S. government can pay back the debt. And the reason for that is that the general public is what really runs the country. When the general public feels confident that the economy is shaping up and moving in the right direction, they're going to spend. But the bottom line is that when the home values plummeted, most people have their largest investment in their home. And if you owned a $200,000 home, and over the period of time when real estate was going up, and that home was now worth $800,000, people felt rich. They had a lot of equity in their home. They would go out and borrow against that. They'd buy big screen TVs and cars, and the economy was doing fine. But now that their home prices have plummeted, and most people are upside down on their homes, that whole scenario has changed. So the fact is that there's no money coming in and there's no confidence to spend. So there's no chance that the economy is going to get any better, at least over the next 5 years. Now, I know I've said this for the last couple months, but I'm 100% convinced that we've got the next 5 years to make a fortune in the market. The fortunate thing with our clients and our listeners to our radio show for the last decade is that we've been discussing this every single week. Randy and I have never missed a radio show. The fact is that for 10 years, these markets have done primarily everything that we thought that they would do. And at least we can go to sleep at night knowing that we have gold, silver, diamonds, which are the only three markets at this particular point that are doing well. I would hate to have my money in paper assets at this point. There's no way in the world that I could sleep at night knowing that scenario is as volatile as it is. So again, we're on the right track. We've got 5 years, in my opinion, to make a fortune of money. 90% of the money is made by 10% of the people, and we're in that 10%. We should be very fortunate that, again, we've been in the gold market since $250, and it's now at $1,660. That we've been in silver since it was at $4, and now it's now at $41.42. The fact we've been in oil since it was at $16 and $18, and it hit, it's still trading at around $85, $86. When you're in these type of assets, The fact is that you're on the right side of the track, and we want to be in these markets for at least the next 5 years, and we anticipate that with all the situations going on at this point, that prices of gold, silver, and diamonds will continue to skyrocket. In fact, the volatility that's in the market is going to work for us. It's not going to work against us. We've talked about this on every show. Those that leverage their positions extremely heavily are going to end up out of the market because these markets will remain very volatile. You know, it first started out when we recommended silver back 10 years ago that if we saw a 5-cent move in silver in a day, that was a big deal. Now we're getting $2 and $3 moves in silver in a day. That's what we need to see if silver's going to get to $150 to $200, and in my opinion, that's a realistic number. So looking at silver right now at $39 or $40, I think it's an exceptional buy. I would be a massive buyer of silver at this particular point because, again, these markets are not getting better as far as the overall economy. In fact, Europe is getting worse. That's one of the reasons that we saw these markets fall so substantially yesterday. But the fact is that they're doing nothing to right the ship, and all they're doing is putting a Band-Aid on open heart surgery. So we should be very fortunate that we are in the hard asset market because those are the only markets that not only are doing well, but have potential to go up to levels that nobody's ever dreamed of before. For the first time in a long time, because, again, I am on a small family vacation in Las Vegas with my kids and grandkids, I am watching what's going on CNBC. It really is sickening to watch these guys. They don't have a clue what's going on. You know, you listen to a lot of the stock analysts, it's all hope, you know, that they think that things are going to get better. And if we can get a 1 or 2% growth, everything is going to be fine. It's not going to be fine. There's no way in the world that that is going to happen at this particular point. I mean, just look at what's happening, that the U.S. government is bankrupt. They owe $15 trillion, and they're begging to borrow more money. And the fact is that they keep on spending and spending and spending. There's no way in the world us as Canadians would ever do it. You know, the fact is that when business things tighten up, you tighten up your purse strings. And the fact is that, you know, you put money away for the future. We're looking at a government in the United States that is totally out of control. And the fact is that you don't invest in stocks when a country is going under financially. And that's exactly what's going on at this point. We've got a tremendous opportunity to do well for ourselves and for our families. And again, I'm very proud of the fact that for the last 10 years, we stood by what our recommendations were. No matter what anybody else was saying, we felt that this was the direction for our clients and our listeners to go. And again, a day does not go by that I don't get emails and phone calls from clients and listeners to our radio show thanking us for the information that we gave to them. So again, nothing has changed in the markets fundamentally. In fact, the fundamentals are getting stronger and stronger and stronger. And the only place that I would put my personal money at this point, and this is exactly what I'm doing, is I've got money in physical gold, silver, and diamonds. And that's where the money is, and that's where all the profits are being made at this point. We're in the biggest bull market in gold and silver and diamonds that we have ever seen. We have never, ever seen a market like this before. The market back in 79 and 80 was tremendous, but again, we're already double the price of gold. So back then, gold went to $850, and we're now at $1,660, probably going to finish the year at $1,850. Congratulations to everybody that's in the gold market. We'll probably finish off the year between $50 and $60 in silver. Congratulations to everybody in the silver market. Again, Randy, with everything going on in the world, and again, you see it as much as probably more than anybody because you put the newsletter together each week. Have you ever seen in all of our years doing this business news that's coming out of the market like it is right now?
Absolutely crazy. And for those that would like to read what Harold and I are reading on a weekly basis, get our free weekly newsletter. You'll see the stories and the notes. You'll see what we use on this radio show. If you'd like to receive our free weekly newsletter, the telephone number 1-866-623-2002. The website is wwpmc.com. Harold recommends that when you invest in precious metals, you speak with Worldwide Precious Metals out of Vancouver, a great Canadian company. That's who he recommends you speak with. wwpmc.com, the website, the telephone number 1-866-623-2002. Harold touched on something important. He said, Randy, have you ever read anything or seen anything this bad? Well, I was actually reading that things, when the traders get back from holidays, will even be worse in September. When we get to September, things could actually be worse. give you an idea of some of the things that have happened here in the summer. Growing concern about the U.S. economy faltering has erased over $1 trillion from U.S. American equities in less than 2 weeks, extending the longest slump for the Dow Jones since February 22nd, 1978, when Jimmy Carter was president and the U.S. was